I can't imagine AIB would be given any good sort of rate with your money just sitting in a deposit account. What's your thoughts on maybe taking some of that money and putting it to work properly?
Yeah, no, you're dead right. Irish central bank statistics show that there is about 160 billion on deposit in Ireland, and somebody challenged me on that the other day, saying, "Oh, that's corporate money. It's not average people." 90% of that 160 billion is in like personal current accounts or overnight demand deposit accounts. So typically your Irish banks, your credit unions, etc. And the vast majority of it is earning little to nothing. So it's mental. Like, nobody in Ireland should be accepting 0% interest on their savings, because the one challenge we all face, of course, is inflation.
In today's episode, we are joined by David Looney of Alpha Wealth. David currently acts as a financial advisor in Alpha Wealth. David's role includes advising in the areas of insurances, pensions, redundancies, savings, and investments. David places huge value on forming professional and valued relationships with clients from all walks of life, both business owners and individuals, and he strives to save them money, make them money, and add value at every interaction by providing independent and straight-talking financial advice. We are so thankful for David to join us today, so sit back, relax, and enjoy this episode.
Okay, Platinum team and Platinum listeners, welcome to today's podcast. It's going to be a fantastic interview. We are delighted because we're starting to do a lot of work down in Cork with our venture side of our business, and we've made a great connection down in Cork. And today we've got Alpha Wealth coming in. So Alpha Wealth are going to give you guys a good breakdown of how a financial plan will look like, and a couple of pitfalls maybe to avoid, and the importance of actually, when you create some wealth or you're on the road to creating wealth, that you can retain a lot of it and that you can put it back into your own pocket. And that's why I've asked my good friend David Looney to join us today from Alpha Wealth to give us a good breakdown. David, thanks a million for giving up some of your time today and jumping in with us.
No problem, Paul. Pleasure. Thanks for having us on.
Lovely stuff. Well, look, as I said to you, we're doing a lot of stuff down in Cork, so you're probably seeing a lot more or hearing a lot more from me. The Rebel County has been very, very good to us, and we hope to expand our business down in Cork. So, Alpha Wealth, you guys have set up over the last 10 years. You're well established now. We've got a lot of members that are in Platinum that is down around the Cork connection. And hopefully over this podcast, or maybe when they re-listen to it a couple of times, that they can reach out and you can support that wing of Platinum down in Cork and do us proud. So just a little bit of a background of what you actually do on a daily basis, and maybe what you're interested in normal life.
So I work as a financial planner, Paul. I've been in the industry now for about 12 years. I've done a bit of a stint for a few years with the Irish banks, got to know the personal financial services industry right up from kind of cashier into loans, credit cards, accounts, doing kind of mortgages for a bit. And I wanted to get in more to the wealth management and financial planning side of things, and the banks were downsizing those departments. So I joined Alpha Wealth back in 2017, I think, at this stage. And yeah, we're celebrating our 11th year in business now. Over that period, we've amassed over 4,000 clients from all around Ireland. We're currently managing about 400 million of assets under management, among our client base, and things like pension, savings funds, investment funds, etc. But all we really do in essence, Paul, is just help people manage their money more effectively and put plans in place to take care of their financial future, and help them with meeting their financial objectives. So it's really about kind of looking at where you are now and what you're hoping to get out of life in the next kind of 5, 10, 15, 20 years, and put plans in place to help you get to those financial objectives, also whilst looking at things like, tax efficiency, protecting your family, everything really within that personal finance space, as I said.
Lovely stuff. Yeah, because you cover a lot of different things. So as we all know about financial, and I think this is where the downfall happens when, you get a young entrepreneur, you got a young person that's, has got a bit of success behind them, or they're creating, they're tricking their mindset that they're going to go into wealth, and they've set up all the processes, and they're on the road to that business. And maybe sometime, because financial planning years ago, it didn't have all these podcasts and different interviews and stuff like that where you can simplify it a bit better, but it was complex. And you naturally would have thought, well, for me to sit with a financial advisor, oh, well, I better have like 1 million in the bank, and I'm nowhere near that. What's your opinion on maybe a young guy? Like we get a lot of young men and women in here, and they have got a good little business operational, and they're starting to look at the world of property to invest. And they may have never sat with a financial advisor, bar AIB or Bank of Ireland, where it's probably a lot of salesy stuff when you go in there, and they
Yeah.
don't have that personal touch. I know by listening into a couple of your podcasts with Clean and Nick and yourself, it feels like it's a little family down there that you can really take someone's future wealth and really mind it and look after it and invest it correctly. What's your opinion on maybe a young person that's stepping into that world to try and connect with you guys? Or is it, what's the early stages to get in, or is it too early? Or
Yeah, so what I would say is most people should benefit from the services of a financial planner, and it's really maybe at a point in time where you're earning an income and you're maybe spending a little bit less than you're earning and have a bit of disposable income freed up to, allocate to places. And what we do in Alpha Wealth basically is kind of put a bit of a focus on what we would call the short term, the medium term, and the long term, because a financial plan is very holistic, and it's about kind of ticking various boxes along the way and making sure that you have the right balance in terms of where your money is going. So looking at your current setup, making sure that you're not overpaying on anything, that you're budgeting correctly and saving correctly, so if your short-term savings in the right places, and then looking beyond that into the more kind of medium to long-term planning, we look at kind of investments, pensions, tax efficiency. So you're right. I think in this modern day where there's so much, on social media, sometimes you just get people that come into you and they saw some self-proclaimed finance guru on Instagram talking about investing in the S&P 500 or buying a property, and they're just that becomes their main focus, and they often forget to do let's say the more kind of basic things correctly. So it's just really about having that holistic approach and making sure that they're doing everything right, rather than just having their main focus on something that might be more very kind of long term for them.
yeah, good stuff. So again, if it was someone young coming in and they've done, the business is doing well, and you've got your AIB bank account and there's maybe 100,000 sitting in it, and all these fees are flying out and direct debits are being paid, and we naturally think as a young professional, okay, well, my goal is now to get to 200,000, but there's probably not too much thought in there. You're just saying, okay, well, our balance sheet shows 100,000 now. Our goal for next year is 200,000, and I put no other structures in place here. As for you as a financial advisor and a financial planner, you would look at the 200 or the 100,000 that's currently in the bank, and you would try and deploy it into a growth structure. Would I be correct in saying that? Or?
Yeah, exactly. And it really depends on the individual. For instance, sometimes we meet people and they come into us all about investing, but then suddenly they disclose that they might have a car loan and they might want to buy their first property, as in a home, not an investment property, in the next 2 years, and they might want to change their car next year, and suddenly they need to refocus their mind and say, okay, I need to access a lot of cash in the short term. So investing with a long-term view in mind isn't necessarily the right thing to do. But sometimes it's this kind of balanced approach where you build up enough short-term cash, and then anything over and above that, we might look at longer-term growth strategies like, investing in investment funds, investing in a pension. So balance is the key word, really. And it's about kind of, adopting a strategy based on your objectives and what the next couple of years looks like for you.
Yeah. So somebody can go in, sit down with guys, and you try and actually map that. It's like
it's a financial roadmap, exactly. Yeah.
A roadmap to success,
exactly. Yeah.
Or even what that goal may look like. So there is no really age as such. I always say as well, especially when we're doing events upstairs, or we're doing training sessions or whatever. We could have an event upstairs of 40 or 50 people come in. And normally you would ask someone, what's your goal? And they'd say, well, I want passive income. And I'd say, okay, have you broken that down a slight bit? No. Have you had any sort of financial advice on it? No. Well, then why do you bloody want the thing? And they're like, well, I don't want to work. Everybody seems to not want to. But this is my opinion, and I could be completely wrong. Nobody wants to. They definitely want to stop working. They definitely want some passive income coming in that they can probably ease back a little bit. But again, they're a bit ignorant to the fact of running a financial plan so you can actually map this roadmap cleanly out to retirement.
Yeah, 100%. Like one common theme or one common goal among our clients is they all want to try to get to a point of financial independence as soon as possible. And ideally, most people want to be financially independent a good bit before the state pension kicks in, which is 66. So a lot of our clients, they want to be financially independent in their 50s. But I think everyone's trying to chase the get rich quick scheme. And you probably know yourself, Paul, it doesn't really exist. Sometimes you need to put in the hard yards and start small and get your money going into the right place and build things up gradually in the right way, rather than taking on too much risk trying to pursue something that's going to double your money every year and suddenly you lose it all.
Yeah, exactly. Yeah, we always have this conversation in here about, someone would say, well, I want to try and get a million liquid. And, and I'd say, well, have you got 25 grand in the bank? They're like, no. And I say, well, why don't you just try and pick a figure and put 1 0 onto the end of that, and then build from there onwards out, and then gradually just try and add a 0 on instead of complexing the whole thing. That's brilliant, David. So again, another big topic that always comes in here as well, and especially when we hear about financial advisors and planners and trying to get your money working a lot harder. And I think that is the topic of today, is that when you do actually make money, that you're putting it to good use and it's spread around well. And it's actually, I call it like a unemployed people just sitting there if your money isn't out working for you. But where do you guys pick on an average of where to invest in? Do you guys pick it yourselves? You have about 400 million under management, so you're obviously under a lot of stress to get that money to work. How do you pick that, and what areas do you put it into? What way does that actually work?
Yeah, not to sound like I'm repeating myself, but it's important to get this kind of structure between short term versus medium to long term first. So I would determine the short term of, let's say, today to maybe a 4 to 5 year period for any savings that you need to maybe go on holidays, change the car, a bit of an emergency fund. Unfortunately, that kind of needs to stay in a bank account, so not invested, because with investments, you do need to give them a bit of time to ride out any short term volatility, and we need that liquid cash to access. So in the short term, we give people advice on some of the best short-term savings accounts, deposit accounts, and some of them at the moment are offered through some of the various online banks like your Raisins, your Trade Republics, your Revoluts, etc. So whilst they mightn't be getting massive returns, we want to make sure that they're getting better returns than sitting in a credit union earning nothing. Now, pushing into the longer term, once we have time on our side, really we'd be looking at well-diversified portfolios there, so trying to accumulate money in a well-diversified portfolio or a fund that might be made up of, say, global equities, bonds, cash, alternatives, etc. And then there reaches a stage down the line, once people have that kind of time-tested, proven strategy in this diversified portfolio, if they want to make more kind of concentrated investments, like, maybe going all in on a particular company or starting to go into property, then yeah, absolutely fine. But I think it's kind of important to kind of gradually work your way up rather than going all in on something eventually. Or sorry,
Yeah,
all in on something initially, should I say? Yeah.
Yeah, no, you're spot on there as well, and like I can feel that as well when I'm upstairs, trying to train guys and girls about property. It can feel like it's just way too much, and it feels like it's completely out there, and it's normally the people that haven't had a financial plan in place that is too much. Normally what I've seen over the last few years is someone that has a roadmap and starts to tap into property towards the end. I think you're spot on. That can be sort of the investment up here after they've got the foundations correctly.
Yeah, exactly. Yeah. Because like,
Lovely stuff.
yourself, I mean, like property can be a fantastic investment, passive income. It should appreciate in value if it's in the right place, but it can also be a very, very bad investment because each property needs to be assessed on its own merits. I think in Ireland, people are just obsessed with owning property. And sometimes you get guys, they become accidental landlords. And before they know it, the house that they were living in is now their investment property, and it might only be giving a 4 or 5% yield, and then they have to pay their expenses and their tax and their fixing the dishwasher and their RTBs and their accountancies, and it turns a 4 or 5% yield into a net yield of probably 1-2%, or they're even losing money, let's say, and then it might be in a rural location and it's not going to appreciate that much in value. So people do need to get a bit of advice from experts like yourself if they are going down the property route, but also make sure that property as an asset class complements their existing portfolio and fits into their structure.
We are delighted to announce that this podcast is sponsored by Platinum Property Training.
Start your property education today. From simply one click of a button, you could be part of the Platinum team. We have made this so affordable for everybody in the country. If you have any interest in property, there's no reason why you shouldn't be part of the Platinum brand. We have got it all systemized. It is right in there with rookies. You can spend 4, 5, 6 to 7 months in there till you get to a certain level, and then you can step up your way through the programs, and you can really start to educate yourself. And we're here to help. We've got the best systems in the country. Click the link below, and we will see you there. Yeah, correct. Well spotted as well. And again, you guys, for someone that may want to start out as well, do you have so they can start to get their brains, because I know there's a lot of people going to be listening into this podcast again, but so they can actually take action today. And I say, I'm going to physically listen to something, take action straight away. Do you have a small savings club, or do you recommend the club, or has Alpha Wealth even got some sort of small platform that they can start to invest and save? And, before they maybe come and meet you, they can just click in. Is there any simplified savings plans you have? Or
yeah, so once people have, let's say, their short-term emergency fund, which I know I keep harping on about, we set up something a couple of years ago called the Alpha Savings and Investment Club, and it was basically to kind of educate Irish savers on the alternative options that are out there in the Irish market outside of your typical banks, credit union, post office. And we basically utilize what we would see as the best savings funds in the Irish market. So these are really well diversified portfolios from, the world's biggest fund managers, but people can access these at quite low entry levels. So they can be started from as little as €100 per month. So you can pay into these plans monthly by direct debit. They are quite flexible in that you can increase, decrease, stop and restart. They do accept lump sums and top-ups as well. And there's various different risk levels and loads of different portfolios that people can choose from within it.
Right. So if someone maybe, money's coming in, they know there's a bit of change left over. They're thinking about, oh yeah, well, I'm not quite an investor. I don't want to do that. This little small product can nearly trick their minds into investing and start them on the road to investing.
Exactly. And the great thing about these plans is they're completely hands off. So there's an experienced fund manager with, the fund has been around decades, brilliant track record. They're managing it for you. You don't have to do anything. When you encash the fund, they actually deduct the tax and hand it over to revenue. You don't have to, there's zero tax obligations on your behalf. And what we might do is maybe meet with a client once a year and do a more kind of formal review, looking at how the fund is doing, how it's performing, is it in line with their kind of risk tolerance and their time frame in mind. So yeah, it's a great way of people just kind of dipping their toe in the investment world at a very kind of hands-off level.
Yeah, no, that's brilliant, and that's really the thing that we want to do, because if you've been working for, if you're in the PAYE all your life, you probably never went into the world of investing. Of course, the returns are great, but you have to start small. I'm a true believer of starting really small, and maybe in a little club like that would definitely trick them into start investing and then lead to the big thing, whether it's property or equities or whatever you're doing. Again, I think this is clear, and maybe this is an Irish thing where it's, oh no, we get our money, we hold it, and nobody's getting any of it, and we're not letting it go. I think a lot of business owners I speak to, they guard this money as if it's, if the place was that burned down, they'd burst through the bank doors and go in and try and grab their money. But I think the Irish people naturally are held back, and they're, they don't want to let go of this thing. And I think last time I checked on Google, this is a testament to it, because I think there's 167 or 168 billion sitting there on deposit in the Irish banks. Now, correct me if I'm wrong here, because I'm not a financial advisor, but That is a pure stupid on all levels. If your money is just sitting there absolutely burning through inflation and if there's no return deployed to it, bar maybe a small bit of interest, I can't imagine AIB would be given any good sort of rate with your money just sitting in a deposit account. What's your thoughts on maybe taking some of that money and putting it to work properly?
Yeah, no, you're dead right. Irish central bank statistics show that there is about 160 billion on deposit in Ireland, and somebody challenged me on that the other day, saying, "Oh, that's corporate money. It's not average people." 90% of that 160 billion is in like personal current accounts or overnight demand deposit accounts. So typically your Irish banks, your credit unions, etc. And the vast majority of it is earning little to nothing. So it's mental. Like nobody in Ireland should be accepting 0% interest on their savings, because the one challenge we all face, of course, is inflation. Everything gets more expensive year on year, traditional or historically by maybe 2.5% per year. So by just keeping money in normal savings accounts, we're just going backwards. You're just depleting your wealth over and over. People work very hard to build up their savings, and the last thing you want is just inflation just wiping out the value on a gradual basis. So you do need to get that working for you. And I think it goes back maybe to the 2008 financial crash. Maybe people adopted a very kind of defensive mindset, and we became very good at saving money for the rainy day, but we became very bad of making sure that money is in the right place. And you can add in maybe the mistrust of financial institutions there. But I mean, there are very time-tested, proven strategies that have worked for investors for well over 100 years to get your money working much harder than it would otherwise be sitting on deposit. So people
Yeah.
look at high savings balances as a good thing. I don't, because I see it as missed opportunities.
Yeah, absolutely. And I see a lot of, and even when I talk to a lot of people, they say, oh, yeah, well, I remember one particular investment we were doing and we were given a 7% return. And we done the deal, sat down with him, and he said to me, I have $250,000 sitting in the bank. Have you any more opportunities like that? And I said, yeah. I said, why have you never, ever gone out to the world of even trying to invest? He says, well, sure, where do I start? That thing's complex. So I think your role and Alpha Wealth's role in the wealth management throughout Ireland is and what you are exactly doing with all your talks and different podcasts is simplifying that so people can see an investment, because they mightn't just understand that if it's sitting in the bank, somebody is using it somewhere along the line. We naturally think it's theirs, but I'm sure them digits are just turned into different bank accounts or something crazy is happening with them. So with a little bit of education and less ignorance into it, you can understand the world of investment, and hopefully you guys can simplify that and give them a bit of a roadmap. I'm going to try and tap into a bit of your knowledge, because we again are a property company, and we train people out to buy and sell property. And once we do that and they get a good grasp under it, and they have the app on their phone and they get to come to all our sites and all our visits, the first place they go after us normally, once they get a complete mindset of what this property investment is going to look like, is into try and get a mortgage. Now, I know Alpha Wealth do a lot of mortgages too. How can you give, or could you give, maybe it's a painful world, the mortgages, because you alluded to 2008 there, and I think after 2008, 2009, the mortgage market in this country has got extremely difficult. So when you're applying for the mortgage, you're trying to get a mortgage over the line, it's very, very difficult to do. A good financial advisor and a good financial broker can really, really take them levels of stress and reduce them right down for you. Can I tap into your mindset of mortgages and how you guys might be able to help a couple of our clients in here, maybe even applying for a mortgage, or the process maybe behind it?
Yeah, so in the initial stages, it's about maybe getting people mortgage ready. So educating them on what the banks look for, your demonstrated repayment capacity, your track record, your how much you can borrow, how much you can afford to pay back. And then when it comes a bit closer to the time, it's about, guiding them to the best lenders, the best rates. We're going through an interesting period at the moment, obviously, because interest rates went up very, very rapidly a couple of years ago, and now they're starting to reverse. So I think vast majority of people in Ireland today need to kind of review their rate, and if they took out a mortgage in the last 2 years, can they pivot to lower rates now? If they're coming off a fixed rate, should they be staying on a variable rate and waiting until rates bottom out at some time next year? I think there's a bit of proactivity on everyone's behalf, particularly people that are looking to take out a new mortgage. Do you want to be locking in a higher fixed rate now when we're likely to see more interest rate reductions over the next couple of months? I know we had another one yesterday. So and then it's obviously beyond that. Maybe people are getting a bit better in Ireland at shopping around and switching their mortgage. There can be a lot of savings to be made by jumping around different lenders and different rates. So yeah, it's just really by giving people that, let's say, impartial, independent advice, because Alpha Wealth don't actually act as a mortgage broker, but we do advise on mortgages on an ongoing basis. So it's just saying to people, look, we've no skin in the game here. We're not selling you a mortgage, but we do want to guide you in the right direction to make sure that you're not making any mistakes.
Perfect. Yeah, because I'm sure the reason why I tapped into mortgages as well is a lot of people that would maybe sitting down with yourselves doing a financial plan might say, well, I don't actually have the extra €200 to go into maybe a small bit of investment, trying to prepare for the kids maybe that's going to come heading for, third level education in 8 to 10 years. That plan sounds great, but I don't actually have it. And then they may look at their mortgage. Because I know from speaking to a lot of investors and people coming on the line, they may look at their investment, or they may look at their mortgage and they go, no, my mortgage is €1,200 and 67 cents per month. And that's the end of that. And we'd say, well, did you ever think of shopping around? Because there's a lot more banks coming into the country now. And maybe that might free up, if they did shop around or they did sit with you for a financial plan, that might loosen up that extra 200 quid or 250 quid that they could put it into a fund and maybe get it working up there, that when third level education comes for the kid, there's something there to help.
Yeah, that's spot on, Paul. We do meet people that say, look, I know kids' education is coming down the track. It's a very expensive time in my life. I know I should be saving for it, but I just can't afford it at the moment. And what we would do there is really just kind of review some of their main financial expenses, like their mortgage rate. As you mentioned, there might be an opportunity to switch on to a lower rate, which might free up more disposable income. Maybe, like, we meet a lot of people that are paying loans, but they have savings sitting in the bank, and you kind of need to ask yourself, should you just wipe out the loan and save the repayment and get that working to more effective places? You talk about things like health insurance, you talk about things like, claiming tax back on certain things. Like, Irish people are very bad at claiming tax back. I think there's like tens of millions every year go unclaimed in tax credits and allowances. So there's various things that you can be doing just to put a bit more money back into your pocket. And once you have that excess disposable income, we can then start, I suppose, getting that to deploy to more effective places with your future in mind.
Yeah, because the group we were sitting with the other day, we were talking about fees going out and stuff like that. And, they all have companies, and health insurance comes in and different insurance policies come in. And I remember speaking to one of the guys and I said, what actually way do you pay that? And he said, personally. I was thinking, now, hang on a minute. I briefly remember that you can, I think, pay stuff like that through your companies. So maybe does that come out in a financial plan too, where you can be deploying certain money might be deployed wrong?
Yeah, we have a special service offering for business owners in Alpha Wealth called our Platinum Review Service, and it basically has kind of tax efficiency in mind, and it's catered for business owners. So it tells you the types of things that you should be structuring through your company, the types of things that you shouldn't, ways to extract more from your business, exit planning strategies for them, the line, all that kind of stuff. Health insurance, actually, there's not a massive advantage of routing that through a business because there is BIK in it. So what you'll find is a lot of companies might just pay for that personally. But look, if the cash is in the business, it might make sense to do it. But there are various other things like, income protection could be routed through a business. You can insure your salary, get the company to pay for it. There is a tax efficient life cover that can be put through a business as well. So if you have a company director, rather than paying for your life cover for your family from personal after-tax money, you can get your company to insure yourself for 4 times your salary. The company picks up the bill, it's deductible against corporation tax, and if anything happens to you, it pays a tax-free lump sum to your dependents. So it's just about looking at a more tax-efficient way of structuring your outgoings.
Yeah, absolutely. And again, you touched into the world of trying to get ourselves insured correctly. God forbid anything happens. And I always bring it back to a point that happened to a good friend of ours 3 years ago now. He had 3 young kids. He had a successful company that was probably coming to a stage where it wasn't doing too well and was put a bit of pressure on him. And obviously, life got in the way and everything came down on top of him. And he's no longer here with us. But there was a wife left with 3 kids with a ball of misery, and there was no financial planning put in place. And I think I always remembered, as an entrepreneur, you're setting up all of these businesses and everything's great, and you're pushing hard over here, and I think I heard your Nick say about the 5%. He's spot on by saying that you've got 5% pushing really, really hard. But at the end of the day, sometimes if we're taken out of the equation through a debt, which is horrendous, and there is no financial plan in place, well, we're leaving behind 3 kids and a wife and probably a lot of stress. Whereas if someone had got this insurance, and I remember speaking to another guy saying, "Oh, that's just all fucking sales," and I was like, "Okay, let me just tell you about this one incident that happened to our family," and he sort of looked at me and went, "Yeah, that makes sense." So
Yeah,
I think
everybody thinks that it's not going to happen to them until you have some, like, it's funny, like most people that come to me saying, I need to put illness cover in place, I need to put life cover in place, it's because they had a friend or a family member or a colleague that, unfortunately got diagnosed with cancer or serious illness, or they died prematurely. It's only when you kind of have that shock to your system that you realize how important it is. But it's so important, like I say to everybody, like it's kind of pointless us talking about putting money to investments or putting money to pensions if we don't have the foundations in place. And the foundations of any good financial plan is A, an emergency fund, and B, good protection arrangements. So having your salary insured, having some life cover there for your dependents if the worst were to happen.
Yeah, and it does happen. Anyway, that's where we were at with that. So we're starting to undiscover there's a lot in a financial plan. It's not just come on in, we'll sit down and chat to you about where it could look like. You're covering a lot of things which can be very raw, and then very, very important as well for you to actually, number one, if you're putting your body under the stress of building wealth, when you build it, you actually get to retain it. So I'm going to try and pick your brain for, if you don't mind, for another 2 or 3 minutes about the world of pensions, and maybe when you come to retirement age. My thoughts on this as well, when, 10 years ago, when I heard the word pension, I was like, that's too above my pay grade. My brain, it's too complex. I think you guys in Alpha Wealth are definitely simplifying that a bit better. How do we simplify it that a 20-year-old can see the importance of of a financial plan in place with a pension strap behind it, and see the importance of, okay, we're going to get to 55, we're going to get to 65, and we don't want to be, well, in my case, I came from plumbing and heating background, walking around like a cripple with no kneecaps, that I can actually say, okay, I'm doing this till hopefully I get to this level, and then I'm relying on one of you guys to tell me you can now extract this level of wealth into your pocket and you have got some sort of income. That brings us to the world of pensions that you guys specialize in. What tips could you give to a young guy that maybe has heard his mom and dad say the words pension and he's zoned out? How can we take it? How can we sexy it up a little bit better than the old word pension?
So I think firstly, you need to appreciate the value of them, okay? And you need to get to understand them a small bit and get some independent advice, because pensions in this country are very understood and they're very underutilized, okay? Like, I've seen people say ridiculous things online, like an S&P 500 will outperform a pension. Like, a pension isn't an investment. Like, a pension is just a wrapper. So like, you can invest your pension in a bank account, you can invest it in property, you can invest it in cryptocurrency, you can invest it in a well-diversified portfolio. So all of the investment options that we have personally, we have within a pension as well. The advantage of investing in a pension, Paul, is that firstly, you get tax relief on the money going in there. So in Alpha Wealth, we refer to this 66% immediate uplift. What do I mean by that? If you're a top rate taxpayer in Ireland, so that's somebody who's earning over 44,000 euro a year income, if you put 100 euro into your pension, you're getting 40% tax relief. So revenue are giving you back 40 euro. So you get 100 invested in the pension, and it only costs you 60 to put that 100 in there. 60 up to 100 is a 66% immediate return. Nothing on this planet is going to give you a 66% immediate return even before the money's invested. Now, when that money's invested, whether it's in property or shares or cash deposits, all of the interest is completely tax-free. So there's no exit tax, there's no capital gains tax, there's no income tax. So if you can imagine the power of completely untaxed compounding returns snowballing over 10, 20, 30 years, it's adding bloody rocket fuel to your savings fund. And people have this idea that pensions are taxed heavily when it comes to retirement. They're not really. People think that they're just deferring tax. You benefited from 40% tax relief on the way in. You benefited from decades of tax-free growth. And when it comes to retirement, you get to take out a quarter of the pot as a tax-free lump sum. Then you draw annual income from the remaining fund. Those drawings are likely at a much lower tax rate than your current tax rate. And what a lot of people forget is even the residual fund value in your retirement years, it still benefits from tax-free growth. So it's a fantastic investment vehicle, but people just don't really understand it. Now, particularly with company owners, they have massive scope to fund their pensions because, as you alluded to earlier when we were speaking, you get these company owners and they're just building up large levels of cash and wealth within their companies, but they're creating an issue for themselves down the line. How do I get that money out of my company? Am I going to take $500,000 out of my company and suffer 52% tax to get it out there? Or am I going to have an exit plan and strategy where I gradually extract that money out on a yearly basis or on an ongoing basis into a special savings fund for me, which is a pension? It's going to grow tax-free, and then I can draw on it quite tax efficiently down the line. You have things obviously like entrepreneur relief and retirement relief we can give people advice on, but your pension really should be your main route to financial independence for most people because of all of the tax benefits that it offers.
Yeah, and that's what I'm really, really trying to get at here as well, because
we are delighted to announce that this podcast is sponsored by Platinum Ventures. Platinum Ventures, we buy houses fast.
Hi Dublin homeowners, are you struggling to sell your property fast in the open market, or maybe that deal has collapsed? Okay, if you're facing this type of a problem, we have the perfect solution for you. Welcome to Platinum Ventures. We buy houses fast. Any property, any condition. We close out them deals within 28 days. Cut out the stress of having endless viewings and having to pump money into property only to sell it. We are not estate agents, and therefore you will pay zero agent fees. Visit platinumventures.ie today. Platinum Ventures, we buy houses fast.
When you tap into this world that you're talking about now, if we would have started with this, everyone would have just heard the big numbers and it would have been great. But we've gone on our stepping stones up to the pension stage where you're going to exit. And also, like, my main goal with Platinum Property and the Platinum Education is to take the knowledge from the people that have it, clearly like yourself, lend it back into the people that need it, clearly like myself, and then we can make a collective decision of where we want to go. And I think, by simplifying that complex, because it is complex. Like, I mean, you obviously, when I'm reading down through your intro here, you're a clever dude. You didn't just step out of the bushes. You've done a lot of training. You've got a lot of names after your own name. So, I mean, your job is to simplify that. Our job is to say, okay, we trust you, we believe in it, and this is where we're going to bring it to. And I think most people can. My goal is to try and show people, or at least tell people, that this world is here, and not to be, just run when you hear the word pension because your dad gave you some story that whatever he invested in didn't fucking work.
That's it, exactly.
All that money went missing, and I'm like, oh, what money? And we as you explore it a little bit, Dad never met his pension advisor bar this once. And I think what I'm trying to get at here is, I have a good feeling that Alpha Wealth it's a people's business, and you're going to be educating people as they go. And I think that's really the important figure of getting them to a level that, okay, we are financially on the road to financial independence. It is going to be a hard road. There's going to be plenty of potholes, but the goal is that we take out 25% of this as a lump sum and maybe buy our villa in Spain that we want to do.
Yeah.
And I'm sure there's loads more rocket launchers you can tap onto the end of that as someone's career is coming in. Have you any more good tips or tricks, or is there any good places that some of our listeners may be able to simplify this word down and maybe start their educational journeys on it?
Yeah, if people just want to tap in more to the world of kind of personal finance, we do a lot of stuff online. Like every month, we do various webinars on different topics. They're free. Like I'm doing one next week, actually, along with a tax consultant focusing on a share scheme. So we have a lot of clients, obviously, who work in multinational companies, and they're getting, awarded with these shares. And a lot of people are completely in the dark as to what the tax considerations are, what they should be doing with them. Redundancy is another thing that I've been really busy with at the moment. There's a lot of big companies laying people off, and people have very important options and decisions to make there. So it's just educating people, not only on those specialized niche areas, but also just kind of things like mortgages, budgeting, saving. We also have a podcast earlier that we were discussing, the Beyond Money podcast. So people can check out all those materials just to educate themselves a bit more. And look, we're always here at the end of a phone call or an email if people want to take that next step and get a financial plan in place for themselves.
That's absolutely brilliant. Last thing before you go, and thanks a million for giving up your time today, because it's really, really important to the younger people that are listening in, and some of the older people that actually just turn around and say, well, I should have done this. The old world should have, could have, might have. If they tap in and they connect with you, it's a job well done. You must be, maybe I'm wrong again. I'm a man that invests in gold, but I'd say financial planners' hearts must be bloody broken from the word Bitcoin. What's your thoughts on cryptocurrencies? Or maybe you're a crypto billionaire, you're not telling us?
Oh, I certainly wouldn't be here, Paul, if I was. I don't mind people having cryptocurrency as a small part of a well-diversified portfolio. Like in financial planning, we refer to a lot as the core strategy and the satellite strategy. So the core strategy is the stuff that your financial future and your financial security are tight, and that's getting the principles right and not taking any like crazy risks. So making sure that we have our emergency fund, we're investing in the time tested proven stuff, we have our pension in place. And then if we want to take a little bit of extra risk on the side by putting some money into crypto, that's absolutely fine, but we shouldn't be doing it with an amount of money that's going to blow up our financial future, let's say. So it should only represent a small portion of a well-diversified portfolio is what I would say, and only invest what you can afford to lose, really.
That's great advice. Only invest what you can afford to lose, because that is a volatile market. And again, there's been a lot of successful people. One thing that triggers my brain, I was bringing in a check into the bank one day, 5 or 6 years ago, probably now. And I met a guy that was in front of me that I knew very well, and he was really, really happy. And I said, what's happening? You're heading on holidays. I see you're going in to cash out a big check. No. I'm investing in Bitcoin. And I went, oh my fucking God. I said, Jesus Christ. What are you doing? I'm lodging this check. I got a 25 grand check out of credit union. Now, he's probably done very well. I don't know. But I mean, what level of education have you had? Have you done any training on? Have you done anything? He says, no, this podcast I'm listening to, your man said it's going to go through the roof, and it probably has. But I was like, oh, that is not investing. Be very, very careful of that.
It's more akin to gambling, really, isn't it?
Yeah, absolutely. David, you've been an absolute great guest. You've represented Alpha Wealth really, really well. All these things are flying through my brain now, as they always do when we do a podcast. One of our girls, very successful, told me the other day she had about 4 or 5 pensions knocking around, and I said, what level of, where are they, what are they? She goes, oh, Paul, I don't know, there's money in that one, there's money in this one. Last thoughts, what would you say to someone that has 4 or 5 pensions knocking around that they know nothing about?
We review old pensions for clients quite frequently, and sometimes it can be better to keep pensions separate because it allows you more options and you can draw on them from different points in time, but you don't need to necessarily keep them in the own employment schemes. You can move them to something called a personal retirement bond to make sure that the ball is in your court in terms of when you access that. So you can access those guys from age 50 onwards, but also making sure that it's in the best place and not being restricted to maybe the limited range of funds in that old employment scheme that might have an access point to 65. Some people might want to look to maybe buy properties within their pension as well. That can be a good mechanism there to move money from an old company pension scheme into a self-administered retirement bond and use maybe a portion of that to buy a property. So yeah, it's good to keep them separate, but it's important to get a bit of advice as well and make sure that they're in the right place.
Great advice. David, thanks a million. Just where can people grab you again? What is the easiest way to grab you for any of your listeners that have listened into today's podcast and said, yeah, that's definitely someone I want to connect with? Or I know you've got the podcast, which is Beyond Money, is it?
Yeah. The easiest way to contact us really is you can email myself, dlooney@alphawealth.ie, or best to head over to our website, www.alphawealth.ie. You can see what we're about there, all our services, and you can also book in for a financial consultation with either myself or my colleague Nick, who's the other financial planner operating in Alpha Wealth.
Absolutely brilliant. Well, thanks a million for giving up your time today, and I'm sure we'll have you back very soon. Thank you very much.
Thank you, Paul. Pleasure. Thanks to all your listeners.
And a brief thank you to today's sponsors of our podcast, Platinum Property Training and Platinum Ventures. Thank you very much for listening in.